Welcome back. You're with us on Corporate Radar. Let's move to the next interesting piece of sort of corporate conversation that we have for you. And this is a CNBC-TV18 exclusive from the ongoing Global Fintech Fest. Our colleague Ritu Singh caught up with Amitabh Chaudhry, MD and CEO of Axis Bank, and began by asking him about the competition from Fintechs to banks and if there's a headroom for Fintechs to take away customers and a part of the profit pool as well. Take a look.
You know, when you talk about the regulations can act as a moat only for a short period of time. End of the day, if fintechs come with the right innovation, the right product, the right customer journey, I think they can continue to take customers away from the banks. And if you're not, we don't react or are not proactive about it. So in my mind, a couple of changes have happened post some of the regulations that have come in. I think the fintechs have had to rethink their model a little bit. I think they have realized that regulation is not a bug, but is actually a feature which they want to have in their operating model, and a very critical feature. So they have to put compliance with regulations fair and center of how they go about building their business models. And I think that realization has dawned very quickly, and a lot of fintechs are repivoting their model. But there are large fintechs out there who are providing services to customers, who are interacting on their platforms on a very large scale. So from a bank's perspective, the reaction to whatever is happening is, I would say, twofold. One is you first continue to innovate yourself and ensure that you continue to attract customers directly. And second is that you work in partnership with all these fintechs, because they are attracting a customers of a certain kind who are using a certain service. In many cases, a bank can come in and supplement and complement what those platforms are doing. And that's precisely what, say, a bank like us is attempting to do. We have huge number of partnerships, some very, very marquee partnerships. And I think we're only building them over a period of time.
Let's broaden the pool a little bit, because, public sector banks that have been saddled with bad loans are coming back stronger with cleaner balance sheets. You have larger private entities being created, your former HDFC Bank merger. You have Jio coming onto the scene, aside from fintechs. Who's the biggest competition for Axis Bank at the moment?
See, all our competition, and the competition is evolving as you rightly pointed out, that public sector banks are coming back, fintechs are becoming more important and prominent, Jio Financial Services are talking about making a big play in the market. The good news is that Indian opportunity is very large. It is only growing. The fact that all of us are here and so many people are here, they see India as a place where a lot of innovation, a lot of growth can happen in a short period of time. And I think it's a question of how you play on that opportunity, rather than all the time worrying about, I have a certain scale and how do I protect myself. I think you should be thinking about how can you grow in this platform which is going to get created for India in a very, very big way in the years to come. So yes, competition is welcome. Competition will always be there. New competition will keep coming. It's a question of how we react to it. I mean, at least in case of Axis Bank, we are seeing this as an opportunity, and that's exactly how we're going about it.
So let's talk about Axis Bank, for instance. It's been a stellar first quarter for most banks. But, one thing we've been seeing playing out is the pressure on margins because of the liabilities getting repriced. In a scenario where inflation is high and RBI may continue to hold rates for a while, what will that mean in terms of your margins and growth outlook?
So the repricing of deposits is still in play. It's not that the repricing of all the deposits has happened, which means that the net interest margins will remain under pressure for a little bit of time. Obviously, every institution realizes that and is trying to ensure using a combination of what kind of asset classes you're pushing, what kind of yields you want to push, if and when the interest rates are cut. Because then again, the loans will reprice faster than deposits. You would see net interest margins coming under pressure. So I think that is some distance away. But in the interim, as pricing of deposits completes, I think the margins will remain under pressure and then hopefully stabilize till the the interest rate cut starts to begin.
At 22%, your advances growth has been strong in the last quarter. But deposit growth has been lagging, and that's a problem that the industry is also facing. I wanted to understand, going ahead, if this gap continues to widen, won't it affect your ability to disperse credit? How do you see that remaining?
Well, it impacts the ability of the entire industry to continue to...
Let's talk about Axis Bank.
Yeah, so in that sense, yes, at some stage, the deposit growth does need to catch up with the credit growth. Otherwise, we will struggle to, continue to grow advances at a certain pace. As you again rightly pointed out, that the growth on the CASA side has been slow. I think what you will see is a lot of banks are doing very well in terms of growing their term deposits. But yes, I cannot take away the fact that if deposits growth remain muted, at some stage credit growth will get impacted.
Mr. Chaudhry, to quickly also touch upon your latest deal that's been in the news. You've announced an additional 6% stake in Max at a price of 113 rupees per share. How do you justify the price, and how do you think the regulator will look at it, given that currently Max is trading at, say, 890 or so a share, and a large part of that business is the insurance part of the business? So do you think there's a bit of a regulatory overhang there?
No, so I think when the regulator revised the guidelines, they made it very clear that the methodology for determining the share price has to be on the
fair pricing formula.
We have followed exactly the same formula. There was a transaction which happened in Max where Mitsui moved from Max Life to Max Financial Services, where a similar formula was used. They, at that time, had done the transaction at somewhere in the mid-80s.
Okay.
So it is not that we are using some different formula. We are following the guidelines issued by the regulator, and we are following the guidelines to the T. Now, again, this is all subject to approval from Reserve Bank of India and IRDA, and we will go through that process. Our view is that, firstly, a transaction of this nature has happened in the past, and we obviously continue to follow the same guideline in doing this transaction.
And, yet we've had the insurance regulator questioning Max, seeking certain clarifications with the... we also had SEBI recently, seek these clarifications. Has SEBI reached out to you on the matter yet?
See, when the initial questions were raised on the transaction itself, and I'm talking about
the last
time, at that time, as part of the inter-regulatory governance, I think IRDA had informed SEBI and RBI about the questions they had raised and some of the discussions they've had with Max and Axis Bank. I think it's part of the same thing. There's nothing new has happened which I'm aware of. So the regulators do talk to each other, and as part of that transaction, they were talking to the other regulators and sharing with each other what exactly the nature of the transaction was and how it has panned out. And I think this latest article or this news item which has come around SEBI is just related to that, nothing beyond that.
But, SEBI is in the last leg of its investigation as far as your first transaction was concerned. And, it's estimated...
I'm not aware of anything of that nature, so when SEBI reaches out to us, we'll let you know.
Well, compared to the 32 rupees per share price then and 113 rupees per share price now, it is estimated that shareholder loss could be 1,800 crores or so. How do you think this would play out in the regulator's eye?
First, please understand that all these transactions are done with the permission of all the other shareholders. We are not going and doing something in isolation. The other shareholders of Max Life approve this transaction, only then something like this goes through.
Sure.
So it is not that it is done at the cost of someone without their knowing about it. It is all done with agreement of everyone else. And as I said, we have just announced the fact that we intend to do this transaction. We still have to go through the approval process. Let the approvals come through when we then will actually do the transaction.
The Citi deal, that's another one that you've now finally been able to close. Has it played out the way you anticipated? What are the synergies you've seen since the 1st of March when the integration was completed?
Well, it has played out exactly the way we thought it will.
Despite Citi losing a lot of customers in the process?
No, that is all media. See, again, please let's understand. When Citi started talking about this transaction in the first place, that was in March 2021. Then they came to the market with a deal in June, July 2021. The transaction was consummated on March 1st, 2023. Now, during that process, Citibank might have lost some clients. And it is obvious that when you do something of this nature, you will not only lose some clients, you'll lose some employees also. And that has happened.
No doubt.
In our structure with Citi, the transaction which we had kind of signed up with them, we had mitigated the risk of something like this happening. And you did see that the overall value which we paid to Citi did come down because they had lost a certain set of customers, which is beyond the framework which is set up.
Agreed upon.
Post the acquisition, both on the employee and the customer side, I don't know where media is getting its numbers from because we are not disclosing any numbers. We are just saying that the 97% of Citi employees came to us. The attrition rate is lower than what they saw in the 2 years before the acquisition, and the customer retention has been extremely high and as per our expectations.
My very last question to you. Recently from Axis Bank, we've had Neelkant Mishra being appointed as the chairman of UIDAI. Just quickly wanted to get your comments on that.
Well, congratulations, Neelkant. I think it just goes to show that we are attracting talent of the highest order, and we obviously encourage our people to engage with the government and get involved in some of the policy-making issues. Neelkant has been at the forefront of this for quite some time, and we are just truly delighted that he was seen fit to be appointed the part-time chairman of UIDAI. And I hope more people like him get appointed from the Axis fold over a period of time. So quite delighted.
Okay, well, that's an interesting conversation with Axis Bank CEO and MD, Amitabh Chaudhry. My colleague Ritu conducting that interview. Wide-ranging, I mean, actually, and we'll continue to play snippets of that conversation through the course of the day.